Hi there, I'm Tyler Bollhorn, and this is the Stockscores market analysis for January 17th, 2010. This week, as always, I'll take a look at the exchange-traded funds that you see here on the left side of the screen. We'll go through the charts of each of those in turn, and I'll give you my outlook for each of those. All right, so let's get started. This is a chart of the Dow, a one-year chart, 6-month chart of the Dow. The exchange traded fund is DIA. Markets were closed on Monday for the Martin Luther King holiday. And you can see that we have a pattern here that is optimistic. The bottoms are rising, the tops are rising. We're sort of at the bottom part of that upward sloping channel. And we need to make sure that this bottom part of the channel right here does not get broken. We had a little bit of a downward move on Friday of last week, and that is not a concern yet because we haven't broken that upward trend line, but that's something to keep an eye on. This is a chart of the Canadian dollar versus the US dollar. It's an exchange traded fund of the Canadian dollar. FXC is the symbol. And you can see that the Canadian dollar's had a pretty good run here against the US dollar over the last month. It's come up to resistance and it is stuck. I think we may see it trade sideways in the near term, but I like the Canadian dollar longer term. I think it's going to be a real outperformer globally, and Canadians should try to keep their cash in Canadian dollars, and foreigners may want to consider buying this ETF, FXC, as a way to play the Canadian dollar. Gold is in a long-term upward trend. The upward trend's intact. It is below resistance up here where we had the market run away. I'm a little concerned if you're a gold bug because of this falling top that's formed. Now we could see the market just continue higher and not really make that falling top, but so far it is working on this this high point here that is lower than the previous high, and so a little bit of concern that some pessimism is coming into gold, but the longer term upward trend line is still intact, and so I think you can still be optimistic longer term. I just would put a little bit of caution in there on gold. Oil has come up to resistance last week. It didn't quite get to resistance. It's actually made a little bit of a falling top there, but generally speaking, I think the longer term oil chart is decent. We've had this pullback. I expect we may get a couple more down days on oil, but it should bounce back. It's had 5 down days in a row here, and I think it's probably due for a little bounce back, but we'll have to wait and see how it does on Tuesday of this week. The long-term upward trend in the Nasdaq is in place. Nice looking chart here for the Nasdaq. We've been locked in this trading range for a couple of weeks. And I think more than anything, that's the market taking a little breather after a pretty good run higher. Ultimately, what we're probably going to see happen is that trading range comes sideways until it hits the upward trend line there, and then it should bounce off of it and head higher. Now, if we break the upward trend line, we're going to have to change from optimistic to neutral or pessimistic, but for now, I would remain optimistic on the Nasdaq market. The S&P 500 is also in an upward trend. We're seeing kind of a theme here. The buyers have been in control of the market for some time. S&P looking a little better than the Nasdaq in that it is not in quite as much of a consolidation over the last couple of weeks, but generally speaking here, the buyers are in control. Market taking a little bit of a pause. Wouldn't surprise me to see a little bit of a pullback in the next few days, but I think the market's healthy longer term, and I would remain long on stocks in general. The TSX, the Toronto Stock Exchange, tried to make a breakout early last week. That failed. You can see right there it opened through resistance in the morning but couldn't hold that. However, the buyers are still in control. We've got rising bottoms there. Longer term, this is an optimistic chart. I just think we'll have to get a little bounce back, and that'll probably come if oil can bounce. I think that the drag in oil and the drag in gold has hurt the Canadian market, but hopefully this week that will end. I expect it will. And finally, we have here the US dollar index, an ETF representing the US dollar index, UUP. You can see the downward trend line was broken. We are in the midst of a pullback, which is common after a break of a downward trend line. You'd rarely see a V bottom where markets would go straight up like that. Instead, it'll take some time for the US dollar to base, but I think the US dollar seems to be doing well against most currencies, although relative to the Canadian dollar, it's been lagging, and really the strongest currency right now of the major ones looks to be the Canadian dollar. So if we're going to put some ratings on these markets here, I would be optimistic on the Dow, optimistic on the Canadian dollar, neutral on gold, neutral to optimistic on oil. I think it's probably due for a bounce, but I'd like to see one up day before I go back to optimistic on that. On the Nasdaq, we are going to take an optimistic stance there, optimistic on the S&P 500. TSX has got an optimistic chart building, and the US dollar index, I'm going to put a neutral rating on it. So generally speaking, buyers in control of most things. Commodities, which are sensitive with the US dollar, all seem to be neutral. Now, the final thing that I want to do this week is demonstrate a market scan and how I found the stock that I featured in my daily newsletter. I do a newsletter each day. You can subscribe to it by going to the products menu and going to newsletters. But because the US markets were closed for trading today, I actually am going to run this scan on just the Canadian market. And we're going to basically look for two very simple things: an abnormal day to the upside on abnormal volume. I find that these two filters are great for finding stocks that are moving on their own story for some fundamental reason that maybe the market has not yet fully priced in. So I run that scan. It finds for me 18 stocks. I'm going to select all and then view these charts in the gallery view. This allows me to go through 10 charts per page. Now, these are all Canadian, more or less speculative stocks, very low price penny stocks, and I just cycle through them until I find the kind of chart patterns that I'm looking for. Here's an example of what I like to see: a stock that's been in a sideways, boring trading range for a couple of months and then makes a breakout on very abnormal volume. Now, of course, that's what we filtered for, but this is a great example of what I like to see, and I would think that this stock has good potential to go higher. Now, to give you an example of a stock that just recently did this, here is an example of a stock that I featured in the newsletter on Friday, and you can see on Friday it made that breakout from boring sideways trading. And then today, the following day, it really had a big jump, and people that were able to do this sort of market scan before the close on Friday saw a real nice profit in a one-day period. All that they're looking for in this case is that abnormal activity. Well, that concludes the Stockscores market analysis for February 17th, 2010. For more information on the tools and services offered by Stockscores, give us a visit at www.stockscores.com. Have a great week in the market and trade.